Hi guys, welcome again to my channel. In this video, I'll be talking about liquidity, everything you need to know about liquidity, the types of liquidity, um, how to trade towards liquidity, and how to avoid entering trades at liquidity zones so you don't get stuck out. Okay, so we have three types of liquidity in the forex market. We have the equal highs liquidity and the equal lows liquidity. We have the buy side liquidity and we have the sell side liquidity, and finally we have the trend line liquidity. Okay, so here I have a graphical representation of all these types of liquidity. So starting with the first one, the equal highs liquidity, this is it right here. What do you mean by equal highs? Equal highs is an area where we have price come to at a particular point and another time also come to that zone. So now we have these equal highs, that is the high that are at the same level. Okay, so at this level, this is not a resistance zone. Retail traders, I mean the set of traders that don't trade smart money concepts or the institutional trading, they refer to this as a resistance zone, right? So they refer to this as a resistance zone. But as an SMC trader, you should know these zones are liquidity zones. Okay, at these zones we have money sitting right here. Okay, and at some point the institutions are going to come here and take out the liquidity that is resting right here. Okay, so how do I know that liquidity is resting right here? Because at this particular point, at resistance zones, retail traders tend to take sell trades. Okay, at this point people are taking sell trades, and at this point again, so traders are taking sell trades as well. So, and they have there's this concept that once price gets to this level again at this particular point, market is going to sell off from this zone again, and at this point they are setting a sell limit to sell these markets right down here. Okay, so at this point, as a smart money concept trader, you want to know that these zones can later be cleared out. Okay, markets can grab these stop losses that are right here, that people set right here. Okay, if they are here to take profit from their sell trades. Okay, so you want to avoid equal highs in the market. They are not zones where you should be taking a sell trade from. Okay, because you can get stopped out when the market pushes up. Okay, so moving down to the equal lows, we find equal lows at areas where price react off a couple of times or multiple times. Okay, so at this situation, some traders will be looking to take when price retraces back here, they'll be looking to take a sell trade to then go up at this point. But as an institutional trader, you should know that these zones are liquidity zones, and markets can push down to grab the liquidity right here and keep selling down. Okay, at this point in time you get stopped out of the trade. Okay, so equal lows are not support zones, they are liquidity zones. So moving on to the second type of liquidity now, the buy side liquidity. Okay, for this buy side liquidity, okay, there are the liquidity that goes above that market grabs above previous highs in the market. Okay, so in this scenario we have this high, we had a break of structure right here, we had this break of structure to the down part right here, and for some retail traders, when price was coming back up, they will have buy stop orders. Okay, for those that use buy stop orders, they will have buy stop orders at this point. Traders that trade breakouts, okay, they call it breakout. So they say once price breaks above this high right here, they want to they believe the market is going to keep buying. Okay, so at some point they get their buy stop orders get activated. They will be in profit for some time, and at some point the market will reverse, because the purpose of the market coming in is just to grab the liquidity above this high. Okay, so they get stopped out of their trade and market continues in the normal direction that it wants to go. Okay, so this is the buy side liquidity. This is grabbing of the previous high. For the institutional traders or the SMC traders, normally when we have a break of structure like this, we know at this zone we are going to have what we call supply zone or other blocks that cause the break of structure right here. And normally when price is pushing back into this zone, we'll likely take a sell trade from this zone. Okay, and this is why confirmation entries are very, very important. So if you took an aggressive entry here as an SMC trader, you definitely be stopped out of this trade because you didn't wait for confirmation entry. So at this point, market pushing up, stopping you out, and also stopping out people that wanted to take a buy trade as well. So this is what we call the buy side liquidity. Okay, so moving on to the sell side liquidity is just the same concept as well, whereby market pushes below the previous low or the last low that was created in the market grabs this low, take out people that trades breakouts, retail traders that trade breakouts. At this point, they say once market break this low, definitely the market is going to keep selling. There are some scenarios actually where this happens for real, where the market will keep selling. But as an SMC trader, you should be wary of this type of setups. Okay, you don't want to be trading breakout because you never can tell if it's just a fake breakout. Okay, in this scenario now, we had the breakout and traders were in profit till this level, but at some point the market reversed and went up. Okay, so at this point, this is grabbing the liquidity, resting below this low. Okay, and also we had people that were buying off. Let's say this is a support zone. People were buying off this support zone. They had their stop loss at this level. Also, if they've not taken profit on their buy trade, they get stopped out too. Okay, so at this point, institutions use the money that was grabbed here to push the market all the way up. Okay, so this is the concept of the sell side liquidity. Okay, so as a trader, you want to be cognizant of this liquidity. Okay, and for the last one, which is the trend line liquidity. Okay, a lot of traders trade trend line. Okay, they trade off trend line. We have traders taking their buy from this point, taking their buy, especially the third touch. People will tell you once we have a third touch on a trend line that has previously been tapped twice, you should take a buy from the third touch. Okay, fine, it works in some scenario, but as an SMC trader, you should note that these zones, this trend line are liquidity area. We have money resting above, and we have money resting below this area. We have people buying off this first touch, second touch, people buying off this touch as well, having their stop losses just below this zone. And at the third touch also, we had people buying from this zone as well, having their stop loss at this trend line. And now the fourth time when market is coming back, they want to take another buy trade. They take another buy trade and have their stop loss right there to take market up. At some point, the market is going to push down and clear all the money resting right here and clear off this liquidity sitting right here. And market clears it off and break below everything. Okay, so this is what we call the trend line liquidity. Trend lines do work. You can take some trades off trend line, but you should be careful. At some point in time, the trend line will be broken. The trend line will no longer support price. It will be broken. So This is the trend line liquidity. We can have it in this buy scenario, and we can have it at this sell scenario. At some point, market is going to clear the money sitting right here. There will be stop loss at this zone, stop loss of traders that are yet to take profits from their sell. Market will grab everything at some point. Okay, so when we have liquidity zones like this, you want to join the institutions and trade towards liquidity. You want to trade towards liquidity. You trade towards liquidity with the institution, not trade against it. You want to avoid, like for example, now we are having selling. By the time market is coming back, as an SMC trader, you don't want to be taking sell trade off this trend line right here. Okay, you want to be looking for possible entries to join institutions and go up. Okay, so now let's move to a real short example of all these liquidity types. So I'll be using Euro USD as a case study in this video, and right here, this is an example of equal low liquidity. Okay, equal lows liquidity. You can see we had a first touch, a second touch, a third touch. Okay, some retail traders will be thinking, oh, when markets come back here, this is a strong support zone. Market has been reacting of it. Let me take a buy trade from this area. So at this point, they'll be taking a buy trade, forgetting that this is not a support zone. This is pure a liquidity zone. Okay, so they are taking a buy trade and they get stopped out of the trade right here. Okay, so as an SMC trader that knows the concept of liquidity, whatever you are doing, you should be taking sell trades and joining the institutions to clear out this liquidity, that is seated right here. Okay, we want to join institutions and clear off this liquidity, not trade against the institutions. We want to be trading with the institution. That's when you make profits. Okay, you don't want to be buying, you want to be selling at this point because you've noticed where the liquidity is in the market. Okay, so looking at our left here, we can also see this sort of trend line liquidity. Market has bounced off this line 2 times already. So at this point on Friday, I saw this set of equal lows right here. And I was like, no, there's no way I'm taking a buy trade, even though this was like some sort of demand zone where we could buy from. But citing this set of equal lows and consolidation right here, citing all of this consolidation, I was like, this is definitely going to be a sell because market needs to grab this money right here and right here. Okay. And also, we can see at this point also, we have liquidity right here, and you can see that market cleared out the zone, this equal lows as well. Okay, so this is how to trade towards liquidity. You don't trade against it, you trade towards it so you can make profitable trades. You should not see areas of liquidity and want to be taking trades against those zones. Okay, so now moving on to the left here, we can see an example of a trend line liquidity right here. Okay, this is a trend line liquidity. Okay, so at this point, I remember last week Sunday I sent out a trade on this same Euro USD because I cited this trend line liquidity. I also cited all this imbalance and unmitigated supply zone right here. So I was like, okay, I can cite liquidity in the market. So definitely the institutions are going to come into the market at this demand area. Sorry about that. At this level right here, we had this demand zone right here. Market broke below it, but maintained this whole area. So I told my channel members that they should watch out for confirmation entries to go long in this on this pair because of these trendline liquidity that I already cited. So I know markets is going to push up one way or the other to mitigate, to take off this trendline liquidity, to fill up all these imbalance and mitigate the supply zone. Okay, so this is how you want to be trading towards liquidity. You want to be taking trades towards liquidity so that you can get profitable trades. Okay, so now moving on to we've done an example on trade line liquidity, equal highs and equal lows. Now let's move to the buy side liquidity. Okay, for the buy side liquidity, both the buy side liquidity and the sell side liquidity, they are in a way that you cannot control it. Okay, you can be used as this liquidity at any point in time, even if you are so careful. It can happen that you may be taken out of your trade when we have buy side liquidity or sell side liquidity. Okay, now let's take this as an example. We can see that let me replay. Let me cut. Okay, so at this point in time, we had a break of structure right here. We have this break of structure right here. We can see we have this unmitigated supply zone. So normally we know markets will push all the way up into the zone to mitigate this zone, right? So normally we'll be looking for a sell trade at this point, okay? And this is why confirmation entries are very, very important, okay? So now, some traders may get into a sell trade to take this market down at this point because, of course, we are in a bearish trend. We took out this low, we created a lower low. The next point is to look for entries and sell back down. So at this point, people will be looking to take a sell trade, right? But what did the market do? The market pushed all the way. Okay, you can see the market got into the zone and pushed up, taking out the liquidity resting above this previous high. It took it out with this candle and pushed down. Okay, so this is what we refer to as the buy side liquidity. At this point right here, market tricked traders into getting into a buy trade. So there are some retail traders that will say, okay, if price breaks above this high, this last high right here, if price should break above it, that means price wants to continue to buy all the way up, okay? But what did the market do? Market tricked people into buying, into certain buy stop orders. They were in profit for some time. You can see market was pushing up, they were in profit, but within some minutes or seconds, market started pushing down, stopping them out of the trade. So the buy side liquidity is to grab the money of traders that initiated buy trades at this point. Okay, it took out their liquidity. Also, the people that were selling, that wanted to sell off this order block right here. I wanted to sell off this supply zone right here. They got stopped out as well. So both the buyers and the sellers were stopped out. In this situation, how do you avoid this type of, how do you avoid losing out on this type of trade? You must wait for confirmation entries before you get into any trade. I always advise you wait for confirmation, because if you had waited for confirmation at this supply zone right here, there was no confirmation for the sell at this particular time. So when it broke above this, you will even be happy that you are not in a sell trade yet, okay? So this is buy side liquidity. The liquidity above this high was grabbed and market pushed down. So the same scenario for the sell side liquidity as well. For the sell side liquidity, as you can see right here, market grabbed the liquidity below the previous low that was right here, grabbed it. Some traders got into a sell trade right here, tricking them to take sell trades, and the market took out their money, broke above their stop loss, and used that to push market all the way up. Okay, so this is what we call the sell side liquidity. The money resting below this support zone or this last low was grabbed and market pushed up. Okay, so this is sell side liquidity. Whatever you do with liquidity is to always make sure you are trading towards liquidity. Okay, you want to be trading towards liquidity. And as you can see right here, market created this sort of liquidity right here, this this trend line liquidity. And as you can see later on, market took out the liquidity right here. You can see at this level, the liquidity that was sitting right here, the liquidity that we have right here was taken out here when the market pushed up. Okay, so this is how to sight liquidity. You want to trade towards liquidity. You want to use liquidity zones as your take profit zones as well. Okay, for example, now if I was in this sell trade from right here now, and I was hoping for these equal lows to be taken out, I can set my take profit to be at this exact low. Okay, you want to be taking your profit off equal highs or equal lows, or at liquidity zones. Or if you have liquidity zones, you want to be trading towards the liquidity. You want to be trading towards the liquidity to join the institutions to grab such liquidity. If you are selling here from here, you've cited this liquidity, you want to join the institutions to sell down and make profit. So this is the concept of liquidity in the market. I hope you were able to understand liquidity with my explanation. If you have any further questions, you can leave them down in the comment section. I will reply to them. You can join my Telegram channel also. Sometimes I do post educational stuff about Forex in this channel, and my channel members get to ask me questions. Like this liquidity, it was requested by one of my channel members as well, and you can sign up to join my academy to learn more about Forex. Thank you very much, and that will be all for now.